going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, AMD, Nvidia, Meta, and Amazon. But before we go over these stocks, their charts, and their price targets, we have to talk about some things that happened last week and some things that are happening this week that could potentially send markets higher or force them to pull back down. Now, the most important thing that happened last week came out on Friday, so the market didn't have a lot of time to react to it, but the reaction was nonetheless negative. And that is because the University of Michigan's consumer sentiment fell to its lowest level in all of 2024. So far in 2024, we've seen it riding above 75 points, which is a great signal. But in May, the preliminary reading fell to 67, which is an alarming sign, and it's alarming because consumers are at the forefront of our economy, and when they're not feeling too hot about the economy, it can impact company earnings altogether. Now, consumer sentiment fell because of rising geopolitical events, and of course, a rising fear that inflation may be surging once again. Now, speaking of inflation, this week's CPI data can give us a better understanding of where inflation is currently because we will be getting the new month inflation report. Now, last month's inflation report moved up to 3.5%, which was the highest level we have seen since September of 2023. This is an alarming signal because higher inflation will mean that interest rates will remain elevated for a longer period of time. What you have to remember is that inflation and interest rates go hand in hand. The Federal Reserve doesn't have too many ways they can battle inflation other than raising interest rates. And they've already raised interest rates to the highest point in more than 20 years. And with that being said, that is starting to put a strain on company earnings. Small companies and large companies both rely on debt in order to grow. And when that debt becomes expensive to borrow because of higher interest rates, of course, it's going to impact profits. So this week's inflation data is going to be very important because if inflation moves up once again, it can send markets spiraling because it means inflation is moving in the wrong direction and starting to move back towards its June 2022 highs of 9.1%. We're not there quite yet, but it is definitely moving in the wrong direction, and we need to see inflation move down in the coming months in order for us to have any kind of confidence of an interest rate cut later this year. Now, apart from CPI, consumer sentiment, we do have U.S. retail sales data that's expected this week. Retail sales is expected to come down from last month's reading because of the uncertainty, because of the consumer sentiment fall. So that's going to be an important number to pay attention to as well. So that's as far as the economic outlook goes. We do have some Federal Reserve speakers speaking as well. We have Jerome Powell, which is going to be the most notable that's speaking as well. So that's all important to pay attention to. So last week was an easy week for the market. We saw markets rising almost entirely for the entire week. But this week we have a lot more uncertainty. We have a lot more economic reports, and we have big box retailer earnings reports. Companies like Walmart and Home Depot will be reporting. So with all that being said, we will be seeing a little more volatility this week, but nonetheless, the market is currently bullish. Let's talk about why we're bullish on the charts. So the first thing we want to do is zoom out to the macro charts. We're going to start off with SPY and then move on to our watch list. We're going to start off with the weekly candles because I want to show you guys where the weekly candle closed on SPY. Remember, when you're watching time frames and when you're watching candles, the longer the time frame that you're looking at, the more substantial that time frame is. And so when we're looking at the weekly chart, we can see that SPY recovered back above a very key trend line last week, which was the 10-day moving average, which you can see here is the blue line on my chart. Now, when we look back at the rally that started in October of last year, we can see that SPY rode that 10-day moving average week over week until it broke it in April or in the middle of April. But nonetheless, it was acting as a support. And then when it fell down, you can see that it bounced at the 20-day moving average. These moving averages are not made up, folks. These are what Wall Street uses. This is what institutional traders use in order to gauge where a stock is currently bullish or bearish. And they use them for entry and exit points. You can clearly see that here the 20-day moving average was used as an entry point. And last week, SPY opened back above the 10-day and pushed all week. So coming into this week, there's not much resistance in terms of moving averages. The only resistance in our way is going to be that all-time highs resistance at 424.61. But it is important to note that this is a pretty vertical rally that we posted since the start of May, which to traders who are more experienced or maybe not so amateur at the market so far, it is important for us to get some pullbacks. So even though we may be bullish, even though we are holding many stocks and we're expecting them to go up, we still want to see a pullback. We want to see a chart relief. We want to see consolidation before it attempts that breakout above all-time highs. If SPY breaks above 524.61 as is with this vertical move, there's a very good chance it will not hold that breakout and it will need to come down for further consolidation. So coming into this week, we'd like to see sideways movement. We'd like to see consolidation before SPY attempts that breakout above 524.61. Now, not all things can be bullish, rosy, and great. Of course, we have to think about the downside. If markets come down, if the CPI report comes in higher than expected, for example, or if retail sales completely blows, then we may see the market come down. And if the market does come down, we have these supports in place. The most important support on this chart is going to be 510.60. But if you are one of those traders who is not looking at the day-to-day and you're looking at the bigger picture, which is kind of what we do, when we're looking at the bigger picture, even a small pullback would not really deter us from our position because SPY is back above all of its healthy moving averages. So if you don't know much about the market or if you don't know how to use moving averages, right here on our chart, we're using the 10, 20, 50, 100, and 200 day moving averages. The longer the moving average, the more weight it holds. But the most important moving average for Wall Street in specific is going to be this yellow line, which is the 50-day moving average. Usually when a stock is trading above that level, it is in a bullish trend, and if it's below, then it is a bearish trend. And you can see that as soon as SPY moved back above that 50-day moving average, buyers started flooding back in and they pushed it back above 520. So coming into this week, besides these supports, if you don't want to use them, you can use the moving averages as support guidance, and you can use them as your entry and exit points in the case that it falls back to them or it breaks below them. And so that's as far as SPY goes. Knowing what we know about the general trend of the market, let's carry that kind of thinking into the rest of the market and see what follows. Tesla is one of the first names on our watch list, which you can see that Tesla has actually struggled to keep up with the market. And knowing that, we know that SPY is going up, but Tesla is struggling, which means that if SPY pulls back, Tesla is likely going to be one of the biggest decliners on that in that period. So keep that in mind. If Tesla is already weak and SPY is going up, and then if SPY pulls back, then it's going to force Tesla even lower. So we're watching Tesla for a downside move, but here are some levels that we're watching. First things first, we want to pay attention to the daily chart where you can see that Tesla closed just above its 20-day moving average last week, but it closed below that 50-day moving average. And we just said the 50-day moving average is the most important moving average for Wall Street to gauge if a stock is in a bullish or a bearish trend. So knowing that Tesla is below it, we are leaning towards a downside move. Here are some levels and price targets we're focused on. Of course, first support in place is going to be 166. If Tesla breaks below that level, we're expecting a move towards 157.50. And below that level, we have a gap that's unfilled. You can see this entire gap from earnings that's unfilled towards 145. Now, keep in mind, this is a pretty aggressive downside price target, so it doesn't mean that Tesla will necessarily hit that point this week. So that means you got to make sure to check back in because we will be updating you guys. So make sure you subscribe and like. Of course, to the top side, if Tesla does gather some strength this week, the first resistance in place is going to be 176. It needs to move above that, but we still wouldn't trust it. Tesla needs to move back above 187.55. for us to have a lot more bullish confidence in this stock. Their earnings weren't that great, you guys. The company did move because they mentioned artificial intelligence and they had a lot of good wording, but their numbers are still not that great, which is an alarming sign for the company. So that means, it could explain why the stock is starting to see that decline. The next stock on our watches is going to be Apple, which moved up on good earnings, but their sales are still declining as well. So like Tesla, we are having a little trouble trusting Apple's upside move, and we are leaning towards a downside move back down. But just because we think something's going to happen, it doesn't necessarily mean it will happen. We just have to trade the charts, and here are some levels that we're focused on for the week ahead. Apple is experiencing what we call right now is a power earnings gap up. A power earnings gap up is when a stock gaps up on earnings and it consolidates at that gap before it tries to push higher. Now, Apple has not retested the highs of those earnings, which is already a weak sign. And so if buyers need to see any kind of movement, they're going to need to break above 187.10 in order to see continuation. To the downside, our support coming into this week is going to be 180.40. This is the lowest point since that gap up. If it breaks below that level, we do expect Apple to begin working at that gap down. First price target would be 177, and the second price target would be around 173. The next stock on our watch list is going to be AMD. AMD is a special case for us. AMD is just one of those stocks that's so overvalued right now. When we're looking at their price to earnings ratio, we can see that this stock is trading at a price to earnings ratio of 222. So that is an extremely expensive stock because a healthy price to earnings ratio is anywhere between 15 and 25. The cheaper, the better, because you'd be getting a better entry. So AMD right now is so overvalued, which could explain why it is struggling so hard to catch any kind of rally. You can see that every move up has been shorted on AMD, and it looks like that was the case for them on Friday when they attempted their move back above the 10 and 20-day moving averages, but by end of day, buyers gave up that support and closed below. And so if you're looking at AMD and you're thinking of taking on a long position, I would trade it and not invest in it until you see that price to earnings ratio come down. If you are trading AMD, you need a breakout above 157.50 first, but buyers won't feel any kind of confidence till it breaks above 165. And to the downside, AMD supports out 147 and 141 being the critical support. Keep in mind that Nvidia and companies like AMAT have not reported earnings yet. AMAT, which is Applied Material, will be reporting earnings this week. This is a very big company in the semiconductor industry, and it will likely influence the semiconductor industry, therefore influencing AMD. So keep that in mind if you are taking any positions on AMD this week. AMAT is going to be reporting earnings. Now, speaking of earnings, Nvidia is expected to report earnings later this month, which is a very exciting event, which also could explain why semiconductors have been moving sideways. Traders and investors are awaiting Nvidia's earnings to kind of gauge where semiconductors need to go next. If Nvidia can meet estimates, which are very optimistic, that means semiconductors will likely head higher because of demand for chips and artificial intelligence technology. For Nvidia in specific, here are some levels we're focused on. Of course, you guys know if you do follow any of our videos, we're extremely bullish on Nvidia. We have been trading Nvidia since 475. In fact, we're still holding our shares, and our next price target is going to be above 1200. For Nvidia in specific, our first support is going to be 870. Of course, if it comes down below that, we have another support. We wouldn't really short Nvidia. We wouldn't play puts on Nvidia. This is just too bullish of a stock to do that. And so we are literally buying almost all the dips on this stock. And so we are next looking for the 933 breakout and another breakout above 974. We don't necessarily know if that's going to happen this month or next month. We do have a position in Nvidia and we have plenty of time on it, and we have a lot of patience for this one as it comes around. The next stock on our watch list is going to be Meta, which reclaimed back above its 10 and 20-day moving averages last week, which is a good sign, but they're still below that 50-day moving average, which means that's the next level and focus if you're looking at the daily chart. But if you're looking at the shorter term time frame, your first resistance after it actually broke above all the key resistances last week apart from 497. It needs to be back above 497 for continuation. To the downside, here are the supports you need to focus on. Last but not least, Amazon touched all-time highs last week, but it moved back and closed below them. And so here are some levels to focus on. We are noting Amazon did see a little bit of bearish flow last week, especially on the put side. And so that fake breakout above all-time highs could lead them lower. So that's something to keep in mind. Our support is going to be 184.70. Below that level, our target is 180. And then below 173.80, that's the critical support. And of course, if you are looking for continuation, you need a breakout above the all-time high of 191.70. And so that's all for you guys. I hope you guys found this video helpful. Thank you so much for checking in. Don't forget to subscribe and like.